Welcome to the Radio Revenue Podcast.
Great to be here.
Today we're pulling back the curtain on Gen Digital Inc.'s latest 10K filing. This one's for the fiscal year ending March 28, 2025.
Yeah, a big document, lots to unpack.
Exactly. Our aim to, unravel the complexities of this really crucial document. We want to uncover what truly matters for your understanding of this major player in digital safety. We're basically cutting through all that dense financial jargon to find the surprising facts, the key insights. Think of it as your shortcut, really.
A shortcut to being well-informed about a company that's, frankly, pretty central to our digital lives now.
Right.
And I think this deep dive is particularly relevant because Gen Digital Inc., it's the force behind so many cybersecurity brands you probably interact with daily.
Yeah, household names, many of them.
Exactly. So their strategic decisions, their financial health, how they navigate the relentless evolution of cyber threats, it directly impacts millions of users globally.
So this conversation isn't just about the numbers then?
Not at all. It's about understanding the challenges, the opportunities facing a company that's really vital to our digital security today.
All right, let's get into it. Let's unpack Gen Digital. Now, their NASDAQ listing is GEN.
Simple enough ticker?
Right, but it kind of hints at a simpler structure than what's really there. They're incorporated in Delaware, principal offices in Tempe, Arizona. But what's critical, I think, right from the start, is their stated purpose.
Yes, powering digital freedom.
Exactly. And their mission statement drills down a bit more. Creating innovative and easy-to-use technology solutions that help people grow, manage, and secure their digital and financial lives. That's quite a broad mandate, isn't it?
It really is. And what's truly insightful, I find, is how Gen Digital manages to unify such, diverse brands under that single banner.
You mean like Norton for security, LifeLock for identity?
Yeah, and Avast for that freemium scale, all under digital freedom. It's not just a random collection of acquisitions. It feels like a strategic portfolio.
So brands like Avira, AVG, Reputation Defender, CCleaner, they're all part of this.
That's right. And together, they boast this remarkable global reach, serving approximately 500 million users.
Going 100 million. Wow.
In over 150 countries. So the big question becomes, does this wide portfolio create, powerful synergy, or does it maybe risk diluting the focus in what's a very rapidly evolving market?
That's a really good point. And it seems their core business has evolved quite significantly. It's expanded way beyond just traditional cyber safety.
Definitely.
Now they're covering security, privacy, identity protection, and most recently, and this is quite notable, financial wellness.
That's the big shift, yeah. Solidified by acquiring MoneyLion.
Right. That closed on April 17, 2025. What do you think is the biggest challenge they face with that kind of expansion, especially moving into consumer finance?
Well, to support such a broad and evolving portfolio, their sales approach has to be multi-channel. It's key.
How does that break down?
So they sell directly to consumers. That accounts for over 40 million of their roughly 65 million paid cyber safety customers.
Okay, a big chunk direct.
Then there's indirect partner distribution, working with retailers, telecoms, even OEMs, bundling their software.
Right, pre-installed stuff.
Exactly. And finally, they leverage those freemium models, especially with brands like Avast and Avira, trying to convert free users into paid subscribers.
So the challenge with MoneyLion is?
The challenge is integrating a fundamentally different business model, one that directly interfaces with users' financial health. That's a different ballgame.
Makes sense. And when we talk about their cyber safety portfolio itself, it's pretty robust, isn't it? Spanning 3 key categories.
Yeah, let's break those down.
Okay, first, security and performance. This is your, real-time threat protection, malware, viruses, ransomware, across all sorts of devices.
The classic stuff.
But here's where it gets particularly interesting. They've integrated AI-powered scam protection. Think Norton Scam Protection and Scam Protection Pro.
Using that Norton Genie AI engine.
Right. And this isn't just about blocking bad links. It actually analyzes the meaning of the words.
Trying to spot those hidden scam patterns?
Exactly. Sounds incredibly advanced. But I wonder, how quickly can they adapt these AI solutions to new, unforeseen AI-driven attacks? Is this AI integration a long-term fix or just, the start of an ongoing arms race?
That really is the core question, isn't it? Because the attackers are using AI too.
True.
And beyond just real-time threat detection, their identity protection piece is crucial. In the U.S., this is largely LifeLock, Avast, and AVG.
Monitoring credit reports, dark web scans, social media, that kind of thing.
Exactly, safeguarding personal info. But what's critical here, I think, is the safety net. If identity theft does happen,
Then what?
they provide identity restoration specialists, and they offer reimbursements for losses and expenses up to $3 million.
Wow, up to $3 million.
That kind of comprehensive recovery service, it
Yeah.
really speaks volumes about the value proposition. It goes beyond just prevention.
Yeah, that's a significant safety net. And the third category, online privacy, is equally vital today.
Absolutely. VPNs are a big part of this.
Right? They're virtual private network solutions from Norton, Avast, AVG, creating those encrypted tunnels for secure browsing, especially like on public Wi-Fi.
But it's more than just VPNs.
True. They also have tools for deeper data protection, like anti-track and secure browser,
And services that help remove your personal data from those public data broker sites.
like Privacy Monitor Assistant and BreachGuard.
Yeah. And for people focused on, say, their online personal brand, there's Reputation Defender, managing search results, social media presence.
So it shows a clear recognition that privacy isn't just about having a VPN. It's broader.
Much broader.
Okay, so we've covered what Gen Digital does, but what about its financial pulse? Let's dig into the numbers a bit.
Right.
Looking at their latest 10K, we see their net revenue increased by 4%.
Up to $3,935 million in fiscal 2025.
Right. And this growth was driven primarily by increases in sales of their identity and information protection products.
And consumer security offerings, too.
Yeah. So on the surface, 4% growth. That's positive, right? But what's the deeper story here? Is there one?
Well, while the numbers show a slight uptick, the deeper insight might lie in whether this growth is truly sustainable, given the intense competition.
Or are these metrics maybe masking underlying challenges?
Could be. For example, their direct customer count rose to 40.4 million, which is good.
Okay.
Direct average revenue per user, ARPU, also saw a slight increase to $7.26.
$7.26 per user.
And the retention rate improved slightly, too, to 78%. Now, these metrics suggest they are maintaining engagement, maybe extracting a bit more value from those direct customers, but integrating new, potentially lower ARPU acquisitions like MoneyLion that could shift these averages in the future.
Okay. So the question is how these individual improvements translate to overall financial health long term.
Exactly, in the long run.
Now, let's talk about something many of you probably watch closely, stock performance.
Always interesting.
The 10K includes a stock performance graph. It compares Gen Digital's cumulative total stockholder return against the S&P 500 and the S&P Information Technology Index.
And they all start at $100 back in April 2020.
Right. This visual, it really tells a story.
It certainly does. As of March 28, 2025, Gen Digital Inc. was at approximately $160.
Okay, $160.
But compare that to the S&P 500 index. It was around $245.
Quite a bit higher.
And the S&P Information Technology Index, that soared to about $315.
Wow. That's a significant gap, isn't it?
It really is. It almost begs the question. In this tech-driven economy, what does it say when a digital security leader can't seem to keep pace with the broader market, let alone the tech sector?
Yeah, what did that underperformance suggest?
Well, it suggests investors might have concerns about their growth trajectory, maybe their competitive positioning. We also see a noticeable dip in Gen Digital's performance around March 2023 on that graph.
Wonder what caused that.
Could reflect market skepticism, or perhaps specific company challenges around that time. It's hard to say just from the graph, but it's noticeable.
So that financial snapshot gives us a sense of performance. But looking deeper into their balance sheet, we can't ignore the debt and liquidity question.
Right, the balance sheet.
Gen Digital has substantial outstanding indebtedness. We're talking $8,355 million.
That is a big number, no doubt.
It is. However, they also report a, pretty healthy $1,006 million in cash and cash equivalents.
Okay, so over $1 billion in cash.
And a significant undrawn revolving credit facility, another $1,494 million available there.
So they have access to funds.
Seems so. Plus, they've authorized a hefty $2,728 million for stock repurchases.
Almost $3 billion for buybacks.
Yeah. So this highlights their capital allocation strategy, doesn't it?
Yeah.
But also that delicate balance they're striking between managing that big debt load and returning value to shareholders.
It's definitely a balancing act.
Okay, let's shift gears a bit. Navigating the complexities of the digital world isn't just about building great products, right?
No, it also involves inherent risks. And a formidable number of legal battles, it seems.
Yeah, the 10K highlights that. The industry overview talks about a growing digitized market, sure, but also one that's highly competitive, highly dynamic.
And with the advancement of AI, large language models, LLMs, the sophistication of cyber threats is just constantly increasing.
It feels like an arms race.
It absolutely is. And this landscape forces them to constantly adapt, especially given the regulatory environment they operate in.
How so?
Well, their solutions are highly regulated. You've got evolving laws around data privacy, blockchain, digital assets. This constant flux creates uncertainty.
Which can impact their ability to market and provide solutions effectively.
Exactly. They have to adapt quickly or risk falling out of compliance. It's like a constant tightrope walk.
And sometimes that tightrope leads straight to the courtroom.
Unfortunately, yes. And they've certainly seen their share of courtrooms.
For instance, they're navigating some significant intellectual property disputes, that Columbia University litigation.
With the $598 million accrued probable loss. Ouch.
Yeah, though the company has appealed that, they've also resolved past issues, like a GSA contract compliance investigation.
Right. That resulted in substantial payments, damages, penalties, attorney fees.
But perhaps one of the most publicly discussed cases has been the jump shot matters.
Ah, yes, the jump shot situation, where Avast, which is now a Gen Digital brand,
Right.
was found to have provided customer data to its subsidiary, JumpShot. That definitely drew a lot of negative attention.
And it's not over yet.
No, there are still ongoing collective actions related to this in the Netherlands and the UK, and a U.S. class action appeal is happening too. The company disputes the claims, naturally, and says it can't assess any material loss right now.
And on top of that, with the MoneyLion acquisition, they basically inherited some active legal battles.
That's right. There's litigation regarding an earnout payment with the Malka seller members.
Okay.
And lawsuits from the Consumer Financial Protection Bureau, the CFPB, and the New York Attorney General, the NYAG, both challenging MoneyLion's practices.
So these aren't just past issues, these are active legal fights.
Very active. And each of these cases, even if they ultimately win, it ties up significant resources, management time, money.
Exactly. Connecting these legal issues to the broader risks, it's clear they can lead to significant reputational harm.
Huge potential for that.
Increased costs, obviously, and just a major distraction for management.
Absolutely. And there's also the challenge of just protecting their own proprietary information, especially with the rise of open source software.
How does open source play into it?
Well, intellectual property ownership, particularly concerning generative AI built using open source components, is still being interpreted by the courts. It creates this really murky area they have to navigate.
So the very tools they might use could inadvertently expose them to risk.
Potentially, yes. It's a complex legal landscape.
And beyond the legal stuff, they face fundamental business risks too, right? Like customer retention and acquisition.
Oh, definitely. The market is just saturated. There are intense competitive pricing pressures.
And acquiring new customers, especially for the MoneyLion side.
Yeah.
That sounds tricky.
It poses a unique challenge, because many of those potential new customers often have limited or no credit history. That's a different risk profile.
Plus, you've got the broader economy, adverse macroeconomic conditions.
Like high inflation, high interest rates.
That directly impacts the consumer finance industry, doesn't it?
It absolutely does, which could affect MoneyLion's business and therefore Gen Digital's overall ability to grow. It really highlights the vulnerability, of having a diversified portfolio when some segments face serious headwinds.
Makes sense. Okay, so beyond the operations and the legal battles, how does Gen Digital actually govern itself? This seems vital for building long-term trust.
Governance is key, yeah.
One area highlighted in the 10K is their insider trading policy. It sounds pretty comprehensive.
It applies to everyone, employees, directors, consultants, contractors, worldwide.
And it's quite strict, isn't it? It goes beyond just prohibiting trading on material non-public information.
Right. It also strictly forbids things like short sales, hedging transactions, publicly traded options, even if you don't possess insider info.
Just to avoid even the appearance of improper conduct.
Exactly. And the penalties for violations are severe imprisonment, substantial fines. It sends a clear message about market integrity.
Okay, that's one piece. What else stands out in governance?
Well, another key insight here is their compensation recoupment policy. You might know it as a clawback policy.
Clawbacks. They adopted that in October 2023.
That's right. This policy allows the company to recover incentive-based compensation from executive officers if there's a financial restatement.
Even if there's no individual fault involved.
Even then, or of course in clear instances of misconduct, it really reinforces accountability at the very top of the organization.
So it aligns executive incentives with transparent financial reporting and ethical conduct.
Precisely. It's a mechanism designed to protect shareholder interests and ultimately reinforce trust in the company's leadership and reporting.
So wrapping things up a bit, what does this all mean for their forward momentum, their strategy?
Well, Gen Digital states they're focusing on long-term profitable growth using three primary levers.
Okay, what are they?
First, they aim to extend their leadership position, continuously introducing new products, enhancing their existing trust-based solutions in this, expanding cyber safety market.
Makes sense. Keep innovating.
Second, they're working to grow their customer base through all those multiple channels we talked about, direct, indirect partnerships, the freemium
That's
models.
a wide net.
Right. And finally, they're heavily focused on customer retention, trying to increase the value they provide to existing customers through new service offerings, better customer experience.
So innovate, grow the base, keep them happy. Sounds like a solid strategy on paper,
It does, but let's put this into context. Given the, intense competition in cybersecurity and digital safety,
which is only getting fiercer.
and that ever-evolving threat landscape driven by AI and LLMs, how critical is Gen Digital's continuous innovation? And then maybe more importantly, its ability to seamlessly integrate new acquisitions like MoneyLion.
That integration piece seems huge.
It really is. So this raises an important question for you, the listener. Can they truly deliver on that promise of digital freedom in an increasingly complex, interconnected world without constantly reinventing themselves and without effectively leveraging every new addition to their portfolio?
So success hinges on more than just buying brands.
Much more. It's about making them truly cohesive and future-proof in a rapidly changing environment.
Well, you've now received, hopefully, a comprehensive overview of Gen Digital Inc. We've gone from its strategic mission to its financial health and touched on those dynamic legal and market challenges it's navigating.
It's definitely a fascinating snapshot of a company grappling with the relentless pace of digital evolution.
It really is. And that brings us to our final provocative thought for you to consider. What does that significant gap between Gen Digital stock performance and the broader tech market actually mean for companies focused on digital protection in this AI-driven world? Is brand trust alone enough anymore? Or does survival, let alone thriving, demand a constant, rapid reinvention of their core offerings to truly keep pace with a market that, right now, seems to be leaving them behind?
Something to definitely mull over. Is trust enough, or is radical innovation the only path forward?
It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.